All right, the highlight for this Wednesday, and there's a couple of them. First of all, before the open, what do we talk about? You got to be careful being short through these highs because they were setting up where you knew these highs were petering out and they'd come out and they hit them and they hit them and they hit them and they hit them. And then you see right before the open, these highs start to define themselves. And that's what's so important about real time reads. If you're trying to analyze the market back in here before any of this stuff happens, right? You're not going to know about levels that become important. So you always got to constantly draw where lines in the sand are. Draw where lines in the sand are. We open up really bullish, number one, and we break. And then once we come back, these people were dead through 60. That's what we talked about, which was then 62. And then there's no coincidence in real time that they come back and they use those levels as support until they're not. And once they got through there, we don't sit on our hands and say, you're still bullish forever. As soon as they had this third time through, like one, count the rotations. First of all, buy stops above here. We talked about before the open. Right before the open, buy stops above there. They did a little shakeout and then other side of the valley, so they had less longs. They run these things higher. They come back one time as support, two times as support, and then they third test with some chop. It's not going to hold forever. If you're not reading that, hopefully you're around someone that is, because that becomes a transitional moment in here instead of way down here when it becomes too late. All right. So let's highlight number one way to prepare yourself before the open on what side of the market to be very careful on first. Everybody wants to get on the right side. But you also got to work on staying off the wrong side. And oftentimes that'll help you get on the right side or be able to determine what the right side is, just a process of elimination. And you always don't have to know what the right side is. You don't always have to have an opinion. But you knew the market was opening up bullish, which is fine. And if it's able to rally pretty quickly after the open and get through some swing highs that were old resistance, there's some follow through. This was a good 10-handle rally, and they couldn't hold on to support twice, and then they fell apart. Now, the second thing was, and this is important to understand what's driving the market and what's not driving, what's new potentially driving the market. And so we had let's even go back and look, just after 9:07 Central, we had news that Michael Bloomberg was going to suspend his presidential campaign and support Biden. That right after 9, coupled with a strong ISM non-manufacturing number, that's to a lower degree, but then also the Bank of Canada at 9 Central cut rates not by a quarter, which was expected, but by 50. So they went a little deeper, but the market is showing us that it was more interested in the fact of Biden winning than Sanders. Before, and it was early on, the market felt like Trump had his best chance to beat Sanders of the whole field. So it would rally when Sanders did well early. But then they start thinking, we don't want his extreme policies to be one step closer to the White House. And they look at Biden being, well, okay, worst case scenario, Trump loses, they lose to someone without those socialistic views. Now, this isn't a partisan preference when I make these comments. The markets want Trump to win for certainty. They know what they've been getting the last 3 or 4 years, and that's where the market is. So a Trump reelection would be bullish. But the fact that Sanders doesn't get within one step of the White House created this, if I ever can get to it, after 9, at least initially, the run-up. And it was a nice run-up. And so we got that news right in here. If it didn't get you long, it got you bullish, which is important. And you were able in real time to assess the why as close to it happening. Not only getting the news, but quickly analyzing it and saying that that's what's driving the market. You know, we opened up maybe 50 points higher in the S&P because Biden had a pretty good night last night. And then that shouldn't surprise you that a Bloomberg withdrawal is good or better for Biden. Now, if Warren Elizabeth Warren suspends her campaign, that could be just short term and knee jerk, bearish for the markets because that's better for Sanders. That's if it happens and if the markets are open, and it'll be a very, I think, short term reaction. But this was essentially a short term reaction, but it was a short term reaction to the tune of 35 S&P points. So the price of poker has gone up, and I keep reiterating that every day when we start the trading room, every day when we do these highlights, that you're sitting at the win on a Saturday night. Price of poker is up. You got to bring more chips. You got to be willing to risk more. And to combat that, you got to reduce your size. A year ago, I couldn't tell you to trade less than one. It wasn't possible. But now with the micros, it is possible to trade less than one E-mini if that's your full size. And you have to almost do that. If you trade 5 E-minis, you got to lower the size. You trade 3, you got to lower the size. If you only trade 1, you got to go into the micros. I know the commission ratio isn't as attractive, tick value to commission, but you know what? It's about, if you're struggling, capital preservation. Very few people who struggle trading all of a sudden turn on in volatility. You got to know what you're doing to take advantage of volatility, and then you love it. But if you struggle before it, it's not going to bail you out. It's just going to, a lot of times, make you pay for your mistakes a lot faster, for a lot more. And you want to avoid that. So again, the highlight today was knowing what the wrong side was first, where the longs might have been nervous, where the shorts might have been nervous, and then also what news came out that affected the markets. Subscribe to this channel. We're moving on up. We got to get the subscription level higher and through 1,000.